Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time to look at Aapl today, and we're continuing our coverage of the top 5 in the S&P 500. It's been a fair old while since I've looked at Aapl. I try to do one a week, but I'm just not managing to stick to it. I'm sorry. Holiday, sickness and life just seems to be getting in the way, but I get round to it when I can, and that's the best I can do. So we're going to be looking at long-term, short-term, bearish, bullish, all those different counts. But first thing I want to talk about today is some basic Elliott Wave and basic technical analysis. If you go back to my last video on Aapl on the 21st of February, all we'd seen was this move off of the low and these two little moves here. And I was talking about how we were going to retrace and then we were going to move higher. And I ended up getting a discussion at the time. There's someone saying, well, what if it's this? What if it's that? What if it's so on and so forth? What if it's a dozen other things? And I reiterated the point, as I have done recently in multiple live streams, as I do all the time, and my patrons will tell you that when I see 5 up off of the low after a significant correction, okay, and then I see 3 back, I am bullish, because the odds are that's next. Okay, if we can just get that simple 5 up, 3 back mentality into our heads when dealing with Elliott Wave before we consider anything else, we have massively improved our odds of being right with the next swing. So why were we suspecting this and this pullback to come before this move higher? Well, let's forget Elliott Wave for a minute and just look at some basic classical analysis. So where had we come from? We'd come from this pivot here, just isolating this swing to this swing. We'd come back to the golden zone, okay, the 61.8%, high likelihood of meeting resistance here. We've got long-term resistance going all the way back to these highs and these lows, projected forward to this high here. Major resistance at the 61.8. Haven't mentioned Elliott Wave yet. Right, significant weakness in our MACD between these two highs. Now, they're not exactly at the same level, or the second one isn't slightly higher, so this isn't technically divergence as we would call it, but it is excuse me, got with a cough at the moment. It is weakness, as we can see with these two highs. Histogram weakening, bullish momentum dying off throughout the back end of this rally. We're coming into a correction, right? So we're getting ready for it. If we come down to the smaller time frame, the 1 hour, we can see how this divergence is much clearer. And I know I'm using the word divergence incorrectly here because this wasn't a higher high. If you come to a double top, right? Try again. Come to a double top. If these are roughly the same level, but you get lower highs in the RSI, that's still divergence. This one doesn't have to be higher. They are diverging from one another. That's what it means. These two are at a level, and then these two are at lower highs. Right, that's still divergence. Now, if it's not specifically or technically divergence because they're not the same level or one higher than the other, it is still observable weakness. Right, here it is dying down in the histogram. Here's these two lows. Here's the average for the signal. Right. So, and we've come to the 61.8. We've come to a major resistance level. We're keeping it super simple. Right, that's enough to suspect that we've got a correction coming. From an Elliott Wave point of view, and this is the next point I want to reiterate. From an Elliott Wave point of view, because I got into a discussion after this video, and I do so on several videos occasionally, where people will come to me and say, well, what if it's this, Tom? And what if it's that? And what if it's the end of a flat pattern, a C instead of 5 instead of A, B, C? What if it's blah, blah, blah? And they might all be valid points. But what I always reiterate is if you come off of a major swing, right, a major pivot in 5 off of the low, and 3 back, you can almost guarantee that the next move will be higher again. If you come down 5 from a major pivot at the top and 3 back, that's what's happening next. Now, there will be that one circumstance with the C wave of a flat pattern completing where that doesn't happen, but the vast majority of the time it will. So when we're talking about Elliott Wave, we can make things as complicated or as simple as we want them to be. So if we take, for example, a correction from the high. Now, a lot of people entering Elliott Wave for the first time will see all this labelling and be like, oh my god, what the hell is all this? I'm not learning all that crap. Okay, and I totally understand. So what I'm advocating is something really simple. Is that we just, yes, you should go and learn Elliott Wave, right? That's up to you if you do. But if we can just learn this one structure, this zigzag structure, this is 5, 3 and 5. It can occur on its own as a correction, as the beginning of an impulse, because we may well get 4 and 5 to follow to get 5 waves, okay, which itself can then become 3 and 5 for a larger zigzag structure, which itself can then become 3 and 5 for an even larger 1, 2, 3, 4, 5. You see what I'm saying? The vast majority, impulse waves, diagonals, the whole thing, everything's made up of zigzags. Everything's made up of zigzags to some degree. Impulse waves are made up of zigzags, right? You just get 5 swings rather than 3. Complex corrections, double zigzags, triple zigzags, they're all made up of zigzags. So if we can just program ourselves to look for 5 up, an impulsive move in a single straight line, contained within a channel, contained within a pitchfork, contained within an obvious piece of geometry which says, I am an impulse, I am 5 waves up. We look for a break, a corrective move, this is what's coming next. Now we can see this everywhere on the chart. Let's come out to the weekly time frame for a minute and just break this down. Now I know you might be saying, I know this, Tom, for God's sake, why are you talking about this? Right, so here we are, small time frame, here's your zigzag. 5 up, you've come back 3, now you're a buyer, off we go higher. Okay, but it's everywhere, all the time, everywhere you go. 3 wave swing, 3 wave swing, 3 wave swing. What about before that? Oh look, it's another zigzag. 5 up, 3 back, 5 up. What about before that? Oh look, that was a zigzag. 5 up, 3 back, 5 up. Yes, we're in larger impulses, we're in a sequence, a trend of higher highs and higher lows. But the point I'm making is that every degree, what are we getting? There's a zigzag, there's a zigzag, there's a zigzag, right? Oh, that's an impulse of 5 waves. Yes, but look at it, 3 wave move here, 3 wave move here, 3 wave move here. Okay, and you can go all the way back to the beginning of time, essentially, and that's how Elliott Wave works. So if we can just get that into our heads, 5-3-5 structure, that zigzag, we come into resistance, we retrace, we buy, we move higher. This is why being a retracement trader, primarily using Elliott Wave to buy retracements, gives us the best chance of getting the best possible value we can. And that's all I really want to reiterate. So if you want to watch that video again and you see how all the things I pointed out around those timestamps, 21:55 for the small time frame count, 26 for the trading opportunities, where in that little part of the video I talk about how a short-term bearish count does not have to contradict or conflict even with a long-term bullish count. We can trade these swings back and forth. You can trade the impulses, you can trade the corrections. It's all about your time frame. Okay, so anyway, that's a good 10 minutes or 8 or so minutes of going on about bloody zigzags on the chart, but I'm just trying to break down that before we get caught up in all of the minutiae detail of subwaves within larger and smaller wave degrees and complex corrections, we should just look at the world like this. If we can just learn to look at the world like this, it makes life simpler. Okay, so just to be clear, I'm not saying, you know, you short every retracement from a high and that you buy every retracement from the low blindly. Okay, we have something called the STS setup, standard trade setup, right, where we look for the opportunity to enter safely and control risk. To limit risk, you must still manage risk. Okay, so let's take the pivot I spoke about in that February 21st video. Okay, we hadn't seen this yet, but we knew it was coming, which, as I pointed out, what do we do next, guys? We return back to the resistance again, and then we get 3 waves back. What's this? This is 5 and 3 again. 5 and 3. Like we spoke about, 5 and 3. 5 and 3, blah 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 blah. The zigzag, here it is again. Here comes our entry and our stop loss. This is now manageable risk. 5 up, 3 back, and off we go, and we make some profit. So yes, of course we manage risk. Yes, of course we're still trying to make a safe setup. Okay, we're not just doing it blindly. I'm just trying to get the point across that if we just simplify Elliott Wave into that simple zigzag structure, we can use it to trade. Now, the long-term count and how it all fits together and breaks down into multiple wave degrees, that's technical analysis. And that is entertaining in itself, and it can be useful in itself, but it's not a practical application to trading on a shorter or time-sensitive time frame. If you want to use Elliott Wave to do that, 5 up and 3 back is the most logical way and simplest way to do it. You can get yourself tied in knots if you try and make it more complicated than that. And I would like to try and make it simple. Now, if you want to learn Elliott Wave, you can head over to the Patreon, join up, and there's a 16 video series I've got which will take you through it. Okay, but if there's one thing I could teach anybody entering Elliott Wave, excuse me, it would be just look for 5 up and 3 back, because as we've discussed, it's everywhere. It's everywhere on the chart. Right, so thank you very much for listening to me rant for a little bit on that. Here comes another rant. Right, now I'm going to try not to get too heated, but I want to just reiterate a point. Now, this is not applied to some bullshit, bankrupt, haven't made a profit in 10 years, piece of shit company which just keeps cratering. Right, what I'm about to say next. This applies to profitable companies consistently over time. Right, with sound balance sheets and more cash than God. You're in an uptrend. High, low, higher high, higher low, higher high, higher low, higher high, high low, higher high, higher low, blah 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 blah. Right, and these corrections can take from 4,000 days to 1,100 days to 400 days to 200 days, 91 days, 56 days to 365 days. And they can come down pretty severely. 82%, 83%, 61%, 45%, 39%, 35%, 32%. Talking not as a trader on that three-way swing over a short time-sensitive time frame, right, trying to make a quick buck over a few weeks, a few months. Talking as an investor. What should you have done each time Aapl sold off? What should you have done after an 82% fall collapse? 83%, 61%, 45%, 39%, 35%, 32%. What should you have done? Self-evident, isn't it? You should have brought the fucking thing. Alright? You should have brought it, because it's Aapl and it's down 32%. Why wouldn't you buy it? Okay? Here's the problem. Every time this happens, there's this group of sadistic... I'm thinking they might actually be sadistic, generally, because I have trouble understanding their logic. People called bears. Now, there's a time to be bearish and there's a time to be short, and I've got no objection to it. I myself can be bearish at times, I myself can be short at times, but there's a difference between taking a trade because you've got a technical setup to support a bearish idea outlook for a while, and spreading fear, uncertainty and doubt FUD on the internet via Twitter about how, I don't know, it could be any kind of complete nonsense like the dollar's going to be replaced and the US is going to collapse. Yes, the biggest economy in the world, with the which is the reserve currency for the entire human species, is going to be replaced by Russia or China, whose demographics are going to halve in 40 years, or God knows what other crap people are talking about. Now, I know I'm getting frustrated and annoyed, but I'm just trying to reiterate the point. Okay, don't listen. For the love of God, I've seen too many young investors get into things and then fall into this trap, fall into this pit of bearishness and world-ending, apocalyptic, catastrophizing cycle. Look, if you'd bought it after a 32% sell-off, or any of the previous ones, on the most recent swing, let's say you've only just started trading stocks, you're an absolute noob, you'd be up 40%. You'd be up 40%, unleveraged. Right? What if you're an old boy and you've been doing this for a few decades, right? You brought that, let's say you got in off of the first STS of this if you understood what the hell that was, and you've stayed in ever since. Right, you're up 5,267, no, 52,671%. Is that enough for you? Right, so just buy when it comes down. One day it will all be over, but Every time, but guess what? This is the problem with the bears. Every time this happens, it's the end of the world. Every time. And you can't listen to it, guys. It's poison. It's poison. It will steal from you opportunities if you listen to this shit. So for God's sake, don't do it. Stick with the trend. Now, I've already said we have to manage risk. You don't just hold endlessly while the trend breaks down and craters and destroys you, right? You manage risk. You have stop losses in place. So just manage risk and buy the damn thing when it sells off. Now, I know this is easier said than done. I'm a human being just like you. Right? I've made all. Why am I saying this? Because I've made all the mistakes. 100% honesty to you. I have made all of the mistakes. Right? I was an amateur. Still am in that regard. I've never been professionally employed as a trader. I've been doing this for a long time now, but I was a retail trader just like you guys. I'm still operating in that space. Okay, now I may have taught myself some rules to follow, but I've made all the mistakes. I've lost the money. I've given in to the fear. I've sold the lows. I've bought the tops. I've done it all. Right, so listen to someone who's been there and has fucked it up and then learned how to get it right. When Meta sells off 80%, what are you doing if you don't buy it? Seriously, what are you doing? When Nvidia sells off 70-something% and you don't buy it, what are you doing? These are the opportunities. It doesn't matter whether it's recession, higher interest rates, inflation, global war, European war as we've seen recently, pandemic, Great Recession, whatever the end of the world porn that's going on Twitter at the moment is, that's the opportunity. That's it. Right there. Okay? And I guess I'm just getting a little irritated and a little annoyed with how I see, especially with younger people who need an opportunity. They need an opportunity to make some cash on the side. They need what they call a hustle, what the kids call a hustle nowadays. They need that opportunity, right? And there are people out there who want to rob them of it, who want to talk them out of it, and they only realise they've been talked out of it when what? We're back at the fucking highs. And that's when they realise they've been talked out of it, if they're intelligent enough to even realise it then. And what a shame. What a shame to have been talked out of it. So, take it from me, someone who's been there, done that, don't do it. Don't listen. For God's sake, just manage the risk and buy the pullbacks and keep doing it, arguably for the rest of your life. Okay? The day will come when it's over. The day will come when a bit larger correction occurs and a deeper correction of part of a larger pattern. But you'll get stopped out at a profit by then. Hopefully a bloody big one by then. So you won't have any worries anyway. So anyway, that's the philosophy section of the video. Let's get on with the actual technical analysis now. So let's come all the way back in to the count over the shorter time frame. So while I neglected to actually share the long-term count for a moment then, didn't I? So reiterating the point once again, let's have a look at the pitchforks. We're within this cycle wave pitchfork. I think it's cycle wave long-term extension. Yes, cycle wave pitchfork. We're still trading within it and will probably continue to trade within it for many years to come. Outside of that, at a larger wave degree, we can go all the way back to the grand supercycle pitchfork, which has been back tested multiple times here. Here's the median line before we actually pivot. Here's the median line after we pivot. Here's the median line again. And again, double bottom. Here's 38.2. And then 38.2 for the top, 38.2 for the top, 38.2 for the top. Then a whole bunch around the 61.8 and the 50. Now we come back to the 38.2 from above. Likely we're going to push back to the 61.8, 50, 38.2, blah, 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 until I'm dead. Okay, and someone younger, and again, in another 20 years, picks up the ball and keeps running with it. Right, so, long-term count. Now let's come in and have a look at the shorter-term count. So, I don't want to... anybody coming back at me going, oh, he's never going to sell off, Tom, it's never going to fail, it's never going to last forever. I'm not saying that. I'm saying you manage risk in the meantime, you won't have to worry about that, will you? Alright, so now let's get on with the actual technical analysis, the actual Elliott Wave segment of the video, which you can skip straight to. I'll timestamp it in case you want to avoid all of that ranting that I've just gone through. But I hope that I've made a point with that rant and it's gotten through to some people, and that may have helped. Who knows? But anyway, let's undermine everything I've just said by talking about what's actually going on from an Elliott Wave point of view. So, the long-term count, correction from a high, count off of a low. One way we can see it currently. If the low is indeed in, we can look at this as 1 and 2, and now we're in a 3. Pretty bullish, right? We can see this whole correction as an ABC flat, 335, into a W, into an X, into ABC zigzag sideways combination for a 4. Now the problem we've got, and I'm going to look at the classical analysis first. This is the one thing that's concerning me. We are losing strength into this high. As we approach the high, we are losing strength. We are losing momentum. Right. Now, it could be the basing that we see in an extension for a wave 3, the consolidation period before we break out and really explode. That's one of the possibilities we can look at. But we don't know. All we do know is that as we make higher highs, we're losing bullish momentum. We are seeing divergence, sustained bearish divergence on the daily time frame, and even the OBV is rolling over. All of this makes me suspicious of this latest leg higher. So if you are long, and you've been long since that pivot, and you use that SCS to get set up, perhaps it's time to just lighten the load. If we're trading over a shorter time period, lighten up a bit, tighten your stops up a bit, comfortably into profit, and prepare for what could be a top. Now it could just be 1, 2, this becomes 3, this becomes 4, this becomes 5. But why is 3 looking weak? 3 should not look weak. 3 should look strong. The only time 3 can initially look weak is if we're extending through a series of wave 1s and 2s, which is ironically extremely bullish if that's the case. So what the hell am I talking about? Well, let's discuss. So take a look at this price action using the polygon. What do you notice about this most recent move? There is a shite ton of overlapping patterns. Now when we see this amount of overlapping structures, we can look at it as subdivision, which we've managed to do. Alright, we've looked at it as subdivision. Let's come down into the 1 hour. Let's just turn off this pitchfork. I'll tell you what we'll do. We'll take that pitchfork out of the folder so it doesn't keep getting in the way. Or hide it. Right, so 1, 2, 1, 2, 3, 4, 5. 3, running flat, 4, 1, 2. So we've got subdivision. We've got a way we can count through it. But when we see this amount of overlapping price action, there becomes several other possibilities. We could have some kind of diagonal structure forming. Okay, we could have an extension forming. So what's an extension again? Well, if we're going into wave 3, and we'll put this together now as a separate count. What do I prefer? I think that. Okay, and then again. Subminuet. That's the wrong one. Subminuet, excuse me. Micro. Submicro. Okay, so here's your extension within a wave 3. Okay. And it's just going higher and higher and higher and higher and higher and higher, on and on and on. This is one of the ways you can interpret all of this overlapping price action. But the reason we have all of this overlapping price action is because they're all the subways building up within a larger wave. So it goes 1 2 1, so 1 2 1 2 1 2 1 2 1 2 1 2 3 4 3 4 3 4 3 4, right, as it breaks out and goes higher. Currently, given my experience, this is not really behaving like an extension. Now it doesn't mean it can't be one. I have seen this kind of thing before, right, but it tends to come off of a deeper move to begin with and tends to elicit more strength than we're currently seeing. Alright, if there's going to be a breakout eventually into 3 and 4 at sub-minute degree, what will happen is there will be a sudden surge of momentum and strength and resumption of bullish volume, and supported by volume as we break into the first 3 at sub-micro of micro of sub-minuet of minuet of minute. Right, we get a sudden 3, and then we get 4, then 3, then 4, and then overlapping. So you'll see sudden strength come into the market, right? And then you can say, oh my god, it probably actually was an extension. Well, in that case, you're going into a bunch of overlapping 3s and 4s, so you can just stick with the lower lows and stick with the trend. It's going to be tricky. You're not going to get any more big swings, right? But until it does that, and unless it does that, there's no way you can know that's what you're dealing with. Right. So it seems like a pretty bold assumption to bet on that. Now, it's no big deal if you do. It's no big deal if you do. You've got, what, how many levels have we got here? Stop loss, potential, even here. Here, 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 here. As much risk as you want to take and can manage from 3% or 4%, 5%, 7%, 8%, 13%, right? So you can be long, right? But why you would take that much risk, I have no idea. Okay, what do I mean? What I mean is that the trend's broken by that point, correct? You're no longer in a sequence of higher highs and higher lows, right? So if that's the most recent pivot we have, that should be the most recent stop you've got if you want to be long. Okay, which we've already discussed is, from where we are, is a little over 5%. Okay, you could take an even shorter one, but you'd have to convince yourself that we're bullish immediately, that we're going higher. I don't think I'd have that level of confidence. So there's the trend, sequence of higher highs and higher lows. You break that recent low, and you break this sequence. You break this extension count, okay, as we currently have it. So we can pop that in. There's always ways to trade it, guys. There's always ways. You don't have to trade it at all. That's option number 1, remember. You don't have to touch it at all. You can go find something else. Okay. So now we've seen the weakness. We've seen our suspicion that we're getting weaker in this move. So let's just make sure this is right. Okay, so if we're lightening up, if we're getting a little suspicious into the highs here, because this is where the next liquidity grab's going to be, right? Because we've already discussed the people who should have been buying down here didn't, and the idiots who are now going to buy are going to buy here, back at the highs, right? And they're going to just give people liquidity to short the thing. It doesn't mean it's going to collapse. That might happen, it might not happen. All I'm saying is we wait now. We've got our long trade set up if we want it. We had it off of this pivot that I mentioned in that previous video, the 26-minute mark, back on the 21st of Feb. We've had our long entry. We can get in, if you're desperate to, off of the pivots I've just shown you, but that's up to you. It's not what I would want to do now. If I wasn't already in, I would not want to be buying here. Okay, I just wouldn't want to be doing it. Right. So if we're going to weaken, and we have evidence that we are, on the daily time frame, we're looking for the next big move which breaks trend. Now from that point, we're looking for the same zigzag structure we've been talking about the whole time. Right, we're looking for 5 down, 3 back that breaks trend. This is this opportunity to short. Now it could be 3 into 4, bit weird, but 3 was weak. It makes no sense at all. So I'd highly doubt that. If we broke down violently from here, breaking trend, I'd say that was the top. Okay, exactly of what we can discuss in a moment. But I would be more tempted to look for a short setup from there. If we extend, we'll do this. bunch of overlapping structure, big explosion and a bunch of overlapping structures as we finish off the wave 3. Right, and then you get retracement into 4 and then off into 5. And we just continue to marching higher and higher and higher and higher into a 1 of a 5 or maybe a 5th intermediate degree of a larger primary degree. All of that's to come in the future. Okay, so now let's talk about the different counts. We've got our extension count now, which we can see here. So let's just pop in that 1 and that 2 at minor degree. So uber bullish count is that. Most recent swing invalidation swing low is at 164.31 within this trend of higher highs and higher lows, which would break if that was invalidated. Alright, that's your most recent position for a stop loss if you want to just buy the top. If that's what you want to do. That's your gig. That's how you roll. Then you've got a slightly more conservative look at it, which is it's also 1 and 2, and this is a subwave 1, 2, 3, 4, 5 into minute 1. So all of this is going to go up and finish in minute 1, a smaller wave degree of this 2, 3, 4, 5. Odd that even though we're in the minor wave 3, we're not eliciting any significant strength. Seems a little peculiar to me. That does, so not a big fan. So if it's not going to be bullish in either way, what are the bearish options? Well, let's start with the one that's going to get invalidated the soonest. A bearish diagonal, an expanding leading diagonal. 3 into a wave 1, back into a wave 2. 3 into a wave 3, back into a wave 4, 3 into a wave 5. 5 is longer than 3, 4 is deeper than 2, 3 is longer than 1. Expanding wedge gets invalidated at 182.94, which is the previous all-time high. Go through this can't be 5 down. You can only lead with 5 and 3 back if we stay below where we began. So 182.92, because 2 can never come back beyond 2 with 5 leading can never come back beyond where 1 began. A with 5 leading, B can never come back beyond where 1 began. If we lead with 3, B can come back. So that's the next thing we'll talk about. So 182.94, go to new all-time highs, we delete this. That leaves one bearish count left in my mind, which is a massive flat pattern at a larger wave degree. Still well within the long-term geometry we've been observing. 3, flat, W, X, zigzag, sideways combination. It's all of that creates one larger wave degree, A. So this becomes A, zigzag with a weakening C to new highs, heading for 1 to 1. Right, breaking new highs, doing a liquidity grab, because you know there's all those just breakout traders out there. They exist and they buy breakouts. There's no explanation as to why they would do that, but they do. So they come in and they provide a huge chunk of liquidity on weakening data, and we get a B wave high. Then we come down in 5, and we get a flat pattern to new lows. Okay, fingers crossed this is what happens, because the idea of buying Apple at $111 just gives me a hard on. Alright, it's just 100% honest, it does. So maybe I'm being biased because I want that to happen, but either way there's a chance that it continues to extend higher. Okay, so we get this extension count, in which case it will explode imminently within the next couple of weeks. It will just fucking blow up. It will go crazy. Alright, and it will just go wave 3 coming up here. We'll see volume come in, momentum come in, strength come in, and that's the clue that it was that's the clue that it was a extension all along. And this is probably one of the last opportunities you've got to buy it. Should have brought it back here, but shoulda, coulda, woulda. We're all human, we all fuck up. We all make mistakes, we all miss opportunities. It's just being part of the species. Here's your most recent opportunity. If you believe that and you're convinced by this, that's the best I can give you at the moment, and it's not good, is it? Buying the high is never good. Alright, but that's the best you can get from it. Alternatively, we have a weak start to wave 3. A weak start to wave 3. Where we've gone 1, 2 at minor degree, 1, 2 at minute degree, and then you'll get some serious strength come in into the minute 3 of the minor 3, okay, going up. But we'll have to wait and see. Alternatively, it's bearish, and you'll start by invalidating or not invalidating this expanding leading diagonal into an A, 3 back into a B. Odds on that it makes a new high and goes for a 1-to-1 and a weakening top, stronger divergence into a new high for a B wave, and we get this flat pattern instead. So when it comes, guys, if it comes, when it comes, and we break this current upward trend and we come down in a nasty 5 that's got strength behind it, and then we come back to a lower high, right, that's your shorting opportunity. That's the way I see things at the moment. I'm lightening up. I'm suspicious that we've got weakness here. I'm not particularly happy with this move in the C leg. It's been nice getting in off of this pivot that we spotted, but I'm starting to lose faith. Now, I'm not going to leave the trade until I get kicked out of it, but at the end of the day, I'm suspicious that we're weak going into the high. So, one final thing to finish off. If this turns out to be a massive flat pattern and a 70% decline in the price of Apple, okay, let's bring it back into log for a minute so we can just stop this here. We can get this logically placed. A 38% decline. Sorry, I was reading the wrong thing. I read 70 here. 38. Sorry, what am I talking about? 38% decline as opposed to the 32 we got here. Please remember that when we're back out into 2024, 2025, just remember what I said earlier. When you're here, if we get here 40% down, there will be bears telling you not to buy it. There will be bears telling you that this time it really is the end of the world, and yada yada yada. But if you ever get an opportunity like this again, please don't miss it. Don't miss it. Just buy the damn thing. Okay, alright guys, thank you very much for joining me on this technical analysis of Apple. I hope you've enjoyed it. I'm sorry I can't give you more confidence or more, confident belief in this count at the moment. It's just a little weak. It's just a little frail, it's just a little weak, it's just a little overextended on the longer time frame, and it's just got me a little suspicious that we're getting weaker rather than stronger into the high. If it is that extension, it will blow up and go flying higher, and I've already spoken about how the only way you can really manage that at the moment. So that's the best I can do, guys. As always, huge thank you to my Patreon supporters. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers. I am supporting the Patreon more than I am YouTube at the moment because of life changes which have come along. So I'm going to prioritise doing live streams and updating things and communicating with patrons before I am updating YouTube, but that's just down to time constraints I've got at the moment. So thank you for watching. I'll be back with you again as soon as I can. All the best. Bye bye.